Greetings, members one and all of the Salivation Nation. Gold. Its reputation, is it taking a beating, or will it remain healthy for quite a while? We've got two different views here. We're going to take a look at this and see what they say. This is coming to us from Bloomberg. Gold's age-old reputation as a haven is taking a beating. Although bullion's had everything going for it this week, from turmoil in Italy to sliding equity markets to a renewal of trade tensions and rethink of the outlook for the U.S. rate hikes, prices are still languishing near the lowest this year. Even a warning of peril from investor George Soros didn't lend a hand. The yellow metal hasn't made any headway in 2018 and is poised to close out back-to-back monthly losses in May, despite the risk aversion now rippling through the markets. The reason lies in the greater appeal of U.S. Treasuries and a rising dollar, according to Stephen Hines, head of trading at Oanda Corp. And also, a lot of this can be applied to silver as well, to a large extent. The strongest dollar is the most significant headwind, but with the European fixed income meltdown in full swing, investors are rushing into the safety of U.S. Treasuries, Hines said by email. So this flight to U.S. fixed income shelters is underpinning the U.S. dollar and tarnishing gold's allure to a degree. There we see gold holds below $1,300, even as equities, bonds, and yields tumble. And right around $1,300. I will say it did break just above it here as of the recording of this video. Spot bullion, which hit a 2018 low of $12.82.18 an ounce last week. Boy, I must have missed that. Oh no, I did. I was thinking $12.28, but it's $12.82. Was flat near $1,300 on Wednesday, while the Bloomberg Dollar Spot Index traded near a November high. On Tuesday, yields on 10-year treasuries sank 15 basis points, the most since the UK voted for Brexit in 2016. But gold was static. Still, Hines isn't quitting on bullion just yet. I'm staying in gold as the downside is limited. Even the plethora of gold geo risk on the table, he said. So it kind of ends on sort of a positive note in that particular article here. And we could see it go lower this year, but I think it's going to make a rebound in time. The long-term lookout for this comes to us from Kitco, and this is saying the gold market will remain healthy in the next 30 years. Investors won't be disappointed, according to the World Gold Council. Now, this is coming to us from Kitco News and World Gold Council. But we shall see, and as you can see, the numbers are positive all up and down the board here for all the metals. While the face of the gold market might change in the next 30 years as technology develops, the asset class and its safe haven appeal will remain solid, according to the World Gold Council. In an exclusive interview with Kitco News, John Reed, head of the market research, said he does not expect gold's role as an alternative asset and portfolio diversifier to be replaced by another asset like cryptocurrencies within the next 30 years. Reed added that it would take a complete disruption of the entire financial marketplace before gold is usurped as a world-class asset. The capital market structure as we see it will probably continue, he says. Gold is part of the financial system. It is a mainstream financial asset, and it too will continue. Reed noted that the remaining question is around the venue where gold is traded, whether it's traded in over-the-counter markets, through futures contracts, or something else. Reed's comments come as traded, whether it's traded over-the-counter, or come as in fintech firms develop new platforms for gold, including Tradewind, which has created a new digital platform, Vault Chain Gold. That's sort of a gold-backed cryptocurrency. I've talked about those on my channel before, silver and gold-backed cryptocurrencies, which allows investors to buy fractional quantities of gold while the market is digital. The platform is backed 100% by physical gold held by the Royal Canadian Mint. And I also note I did a video about how the Perth Mint is launching another the same type of deal. In a WGC report that looks at the gold market all the way up to 2048, Reed said so far there is no front runner in the digital gold market, but there is a growing potential. Yep, this technology is still being explored. And really, it's a good thing, because if the blockchain or some sort of peer-to-peer type of technology does emerge as a clear front runner and a winner for this, it's good that these organizations are looking to get involved in it to kind of really keep gold as a foundation, because otherwise it's just ones and zeros for sure. At least you have a little something backing of it, even if you don't have it in your physical possession. But I do like the idea of being able to cash out when you can or need to. But even if they do that, nothing will replace having the physical in your hands, in your possession. And that's kind of where I'm at. In a WGC report that looks at the gold market all the way up, and we read that about there is no front runner. If one or more is successful, it could be as big a change to the gold markets as the development of ETFs, but with the added advantage of appealing to younger generations too. And again, ETFs do not, by any way, stretch your imagination, take away or replace physical gold in your possession. Not only can digital gold markets help to democratize the precious metals, Reed said they are seeing evolving technology in mobile application space that could be a game changer for consumers in developing nations. Reed noted that app-based savings accounts that let people store their savings in gold is growing in popularity, especially in regions that are that have an underdeveloped banking system. I think opening up the gold market for investment purposes to billions of people who don't have wide access to financial products is going to be a major development for the market. China will play an important role in gold financial markets. While access to the gold markets is expected to enter the digital realm, Reed said that they expect to see a healthy physical demand, especially as China and India become more prominent players in the global marketplace with its growing middle class. And the reasons for that is because as a cultural aspect of both those nations, per capita, there's more gold ownership in those nations than any other nation in the world for cultural reasons. In the report, Reed said that the WGC expects the Chinese economy to surpass the U.S. and become, with its growing consumer sector, the biggest influence on global markets because of their population. So there's more economic activity. Our research has shown that nations become wealthier, consumers spend more money on gold. The growth we see out of China is going to be good for gold demand. And I'll stop right there. The research shows that nations become wealthier, consumers spend more money on gold. And that is true where it is a part of the culture. In our country, it's the opposite. Less and less people are aware of gold and its value, and nor do they care about it. And that's sort of a different subject. And but the growth we see out of China is going to be good for gold demand. The U.S.'s loss in dominance will lead to a weaker currency that will also be good for gold. And I disagree with that statement too, because the reason why Chinese may surpass the U.S. in economy is just because of its scale. The fact that there's more people. Although it bears repeating that the average Chinese person has much less quality of life than the average American, and poverty. There's much more poverty in China than there is in America. So just because there's a more active economy as far as what's going on doesn't mean that it's a healthier economy. Maybe a larger economy, but it may not necessarily be healthiher. And it doesn't mean that our currency is going to become weaker because of that, because the dollar is a strong, it's the best of the worst out there, and I believe that if the Chinese economy becomes larger, doesn't necessarily mean it's going to be healthier. However, while Reed sees potential for the U.S. dollar to lose some influence in the global market, he does expect the greenback to completely lose its reserve. Does not expect the greenback to completely lose its reserve currency status. Of course it won't. It's not going to. It's by far the best of the currencies out there. China's closed capital markets and currency restrictions make it impossible for the yuan to be a reserve currency, he added. Well, it's in the IMF and the breadbasket of currencies now, but but yeah, it is obviously restrictions, and plus they're also playing with their devaluing their own currency. There's a lot of shenanigans going on in China, and China itself as a nation is moving backwards in terms of their structure to more of a Mao type of system, communism and the like. So be aware of that as well. Ultimately, the market will see ebbs and flows in investor demand. Reid said that the gold markets will remain healthy through the next 30 years. Not only will the yellow metal see consistent demand, but Reid added that the World Gold Council's research shows declining supply through the next 30 years. And that may be a separate video that I may do, but it kind of backs up the theory that I had, that we have probably just surpassed peak supply, mining supply of gold and silver, but doesn't mean we're going to run out anytime soon, and doesn't mean that it's going to be a dramatic decrease in the coming years. So we'll maybe take a look at that in a follow-up video. I don't think people will be disappointed in the gold market 30 years from now. You can't take something that has 6,000 years of value and replace it with something new. Exactly right. Exactly right. Now that sums it up. So post your thoughts below. I'd like to extend a multitude of gratitude y'all for watching and encourage you to please rate, comment, and subscribe.